Wonderful good day, ladies and gentlemen, to the mining news on Commodity TV. The World Gold Council reported figures for Q1 2023 with gold demand excluding the OTC at 1,080 tons versus 1,238 tons in Q1 2022, representing a 13% decline for the first quarter. This year, jewelry demand increased to just under 478 tons versus 475 tons last year. This was down 5% from the 5-year quarterly average of 501 tons. China's jewelry demand was just under 198 tons, up 11%. This means that China accounts for over 40% of global jewelry demand. Mine production in Q1 2023 was 856 tons versus 843 tons in the first quarter last year, up 2%. This reflects the higher gold price, which prompted some producers to temporarily ramp up, but honestly, this will not be sustainable. Central banks continued to buy, increasing their gold reserves by 228 tons compared to 82.7 tons in the year-ago quarter, an increase of 176%. What do they want to tell us? This follows record demand of 1,078 tons last year. The Basel III agreement has consequences for central banks as gold reserves must now be valued at 100% as opposed to 50% under the old rules. We remain positive on gold and see an opportunity for $2,400 to $2,500 per ounce within the next 12 to 18 months. Osisko Gold Royalties again reported very strong Q1 2023 results, earning 23,111 gold equivalent ounces, up 27% from Q1 2022. And royalty and stream revenues were $59.6 million. Cash flow from operations reached $45.5 million and cash margin was $55.5 million or 93%. More importantly, net income of $20.8 million or 11 cents per share. Also, $15 million was repaid under the revolving credit facility and cash increased to over $119 million as of 31st March 2023. To the delight of shareholders, there was again a quarterly dividend of 5.5 Canadian cents, which will then be increased to 6 Canadian cents next quarter. Osisko Gold Royalties is a core investment in the gold sector. Another royalty company, GROY.TO, also reported strong quarterly results. Gold Royalties is starting to feel the benefits of starting and ramping up production at key assets in a positive way. Their first production blast occurred at Odyssey South in late March 2023. GROY.TO Gold is on track to enter production early next year, and exploration success at Ren expanded the resource footprint well beyond existing underground development. These advances represent significant potential near-term catalysts for Gold Royalty, and the company will continue to grow rapidly organically. Total revenue and option proceeds were $2 million as of 31st March, an increase of 12% over the same period compared to 2022. With available liquidity of approximately $35 million, including a $15 million accordion feature in its credit facility, the company is well positioned for further growth. Gold Royalty declared its 5th consecutive quarterly dividend, which yields over 1.8% at current share prices. Management believes the company is on track to achieve its previously announced guidance of $5.5 to $6.5 million in total revenues and option proceeds in 2023, based on production forecasts released to date by the operators of the properties in which the company has an interest, a projected gold price of $1,700 to $2,000 per ounce, and expected payments on the option properties. We think they maybe do better. The company expects to incur recurring cash operating expenses of $7 million to $8 million in 2023 and believes it will generate positive net operating cash flows in 2024. We are positive for both stocks, of course. Please note the disclaimer superimposed now, and the shares discussed are part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.